FAANG is out and the Magnificent Seven are in. An AI boom has fueled the rise of a new group of mega cap tech stocks that are dominating the market this year. On this IBD Explains, we ask, what are the Magnificent Seven and what do investors need to know about them? And here with me to help break things down is IBD's personal finance and management editor, Matt Krantz. So Matt, what are the Magnificent Seven?
Yeah, these are the stocks that everybody is entranced with, and let's rattle them off since people love them so much. Apple, Microsoft, Alphabet, Amazon, NVIDIA, Tesla, and Meta, the company formerly known as Facebook. These companies have basically hijacked the NASDAQ 100. So to explain that, just these 7 companies account for 60% of the market value of the NASDAQ 100. It's just astounding. I mean, they're just kind of winner-take-all kind of companies, and everyone wants to get involved in them and invest in them, and I can understand why.
Can you talk a little bit about why the dominance? What is really fueling this power hold that they have over the NASDAQ 100?
That's a great question, and it's really due to the nature of the internet economy. It's basically winner takes, maybe not all, but most. So, Apple dominates with smartphones, and Microsoft dominates now with, AI and operating systems, and Amazon eats retail. And anytime someone else tries to encroach on that, they just crush them. They have such a dominant presence in these markets, and these markets are enormous. So it's really easy to see how they get so big so fast.
And as you said, they make up a huge weight of the NASDAQ 100. And to kind of counter that, the NASDAQ 100 is rebalancing. What does this mean, and what effect will this have on these stocks?
Yeah, so the NASDAQ normally rebalances 4 times a year, but every once in a while, they do this thing called a special rebalance, and that's what they're doing. They've only done this twice before. They did it in 2011. And they did it in 1998. 1998 is kind of funny because that was right before the dot-com bust. So it made sense that they had to do this before that. So what they do, there's 2 numbers to remember, 4.5 and 48. So what they're doing is they're looking at their index, and any stocks that account to 4.8% or more of the index's market value, and that they together account for 48% of the total index's value, they have to do a special rebalance because they've gotten too big. So that's what's kind of interesting. There's actually 6 companies that are going to follow into these rules. Meta just misses it. So in this case, it's kind of the super 6 that are kind of being targeted by the NASDAQ 100.
Well, Matt, as you were rattling off those names, a lot of them are familiar. We had FAANG, then we had FAANG Plus. Now we have this Magnificent Seven. Investors like to think about these mega cap tech stocks as a group, but that doesn't mean that they're all created equal or that they'll all outperform the market. But back when FAANG was coined, that trade worked until it didn't, and those stocks eventually started to diverge. So with this new group, how should investors go about determining, which of these names is good enough to add and maybe keep in their portfolios?
Yeah, that's a great question. I mean, this has happened before. In the 60s and the 70s, we had the Nifty 50. And it sounds so quaint now, but there were 50 companies that kind of dominated the indexes. And people thought, if you just buy these, you're going to be set. Well, it did not work out that way whatsoever. They diverged, and the same thing happened with the FAANGs, and the same thing's going to happen with these 7 stocks. They're all in very different industries. They're all quote unquote tech, but not really. For example, Tesla's not a tech stock. It's in the consumer discretionary sector, and it's going to act very differently than NVIDIA, especially in the age of AI. I mean, they're all big and they're all tech related, but I think you're spot on with that. You have to treat them separately. And if you start treating them as a group, you're going to get into trouble. And I think that's exactly what the NASDAQ is trying to combat with the special rebalancing.
And just for those investors that are maybe not looking at individual stocks, but maybe they want to play the theme, is there an optimal way to invest in these names, or any exchange traded fund options to kind of get in on this?
So great. So if you want to invest in these individual stocks, you want to stick to the IBD rules. We have very great guidance on individual stocks and how to pick the best ones and what to do when they go up, what to do when they go down. So you want to stick by those rules. If you don't want to pick an individual stock, you do have other options. You have the QQQ. There's also the cheaper version, the QQQM, which does have a built-in 24% cap. So if any of these individual stocks gets to 24% or higher, which they have not, they will be capped, and it costs less than the QQQ. And other options, the QQQE, the E stands for equal weight. So rather than weighting them based on their size, they're all weighted the same. And that's actually another option to kind of go at if you don't want to try to pick individual winners.
Well, Matt, thank you so much for your insights today. We really appreciate it.
Thanks for having me.